Hello, and welcome to this video where we will share with you 5 golden rules to success in investment. Whether you are a beginner or an experienced investor, these rules can help you make better decisions and achieve your financial goals. But before we start, make sure you hit the like button, subscribe to my channel, and turn on the notification bell so you don't miss any of my future videos. All right, let's get started. Rule number 1, invest for the long term. One of the most important principles of investing is to have a long-term perspective. Investing for the long term is like planting a tree. You start with a small seed, and over time, with constant patience and care, it grows into a strong, sturdy tree. Here's why it's a must-win strategy: the magic of compounding. Imagine you have a snowball at the top of a hill. As it rolls down, it picks up more snow, growing bigger and bigger. That's compounding. When you invest, you earn interest on your money. Then, you earn interest on the interest you've already earned. Over many years, this can turn a small amount of money into a big pile of cash, smoothing out the bumps. The stock market can be like a roller coaster, full of ups and downs. If you're only in it for a short ride, those dips can be scary and costly. But if you're strapped in for the long haul, you'll have time to ride out those bumps and watch your investments grow. For example, let's look at someone who invested in the S&P 500. If they put in money and left it there for 20 years, they'd likely see it grow by 340%. However, if they invest in the market in 2008 and quit the market because of the poor performance, they will lose 40% in one single year. Then how can you do it? Start early. The sooner you start, the more time your money has to grow. Keep adding. Just like adding levels to a building, keep adding money to your investments. You can set up automatic saving plans to put aside part of your salary into investment every month. Even it is a minimal amount. So remember, investing for the long term is a smart move. It's not about getting rich quick. It's about building wealth slowly and surely, like a tree growing strong and tall. And just like a tree, it needs time, care, and the right environment to thrive. Keep your eyes on the prize, and one day, you'll enjoy the fruits of your labor. Rule number 2, diversify your portfolio. Another key rule of investing is to diversify your portfolio, which means spreading your money across different types of assets, such as stocks, bonds, real estate, commodities, etc. Diversifying your investment portfolio is like having a team of superheroes. Each hero has different powers, and together, they can face any challenge. This is how diversification works. It combines different types of investments to make your money stronger and safer. Here's why it's a winning strategy: safety in numbers. Think of your investments as eggs. If you put all your eggs in one basket and drop it, you could lose them all. But if you spread your eggs across many baskets, dropping one won't be as big of a deal. Diversification means spreading your money across stocks, bonds, real estate, and more. So if one doesn't do well, the others can help keep your money safe. Different strokes for different folks. Just like some superheroes are better at flying while others are great at swimming, different investments do well at different times. Stocks might soar while bonds are slow, or real estate might rise when commodities are calm. Diversifying gives you a mix of these superpowers to handle whatever the economy throws at you. Exploring new worlds. Diversification is also about exploring new opportunities. Maybe there's a new technology sector taking off, or a country's economy is growing fast. By diversifying, you can invest in these exciting areas and not miss out on their potential growth. So remember, diversifying your portfolio is like assembling a diverse team of superheroes. It helps protect your money, take advantage of different strengths, and explore new opportunities. And just like a superhero team, a diversified portfolio is stronger than the sum of its parts. Rule number 3, do your research. Before you invest in any asset, you should do your research and understand what you are investing in. You should know the fundamentals of the asset, such as its history, performance, prospects, risks, and valuation. Doing research before investing is like being a detective. You need to look for clues and gather evidence to solve the mystery of where to put your money. It's a must-win strategy because it helps you make smart choices and avoid costly mistakes. Here's why research is key and how you can do it. Knowing what you're buying. Just like you wouldn't buy a car without checking if it works, you shouldn't invest in something without understanding it. Research helps you learn about the history, performance, and future of what you're investing in. Seeing the big picture? The market is like a big puzzle with lots of pieces. Research helps you see how your investment fits into the larger picture of market trends, economic factors, and what other companies are doing. Avoiding bad decisions. Sometimes, people invest based on a hot tip or because they have a good feeling. But research helps you make decisions based on facts, not just feelings or rumors. Then how can you do research? Start with the fundamentals. Look at the company's website, read about its history, and check its financial reports. Look at the numbers. Use tools like charts and graphs to see how the company's stock has done in the past. Read the news. Keep up with what's happening in the world that might affect your investment, like new laws or big events. Remember, doing your research is like putting on your detective hat. It takes time and effort, but it's worth it to make sure your investment is a smart one. Rule number 4, manage your emotions. Speaking of emotions, one of the biggest challenges of investing is to manage your emotions and avoid letting them interfere with your decisions. Emotions such as fear, greed, excitement, and regret can cloud your judgment and lead you to make costly mistakes. For example, you may be tempted to buy an asset when its price is rising, or sell an asset when its price is falling, without considering the underlying value or potential. Managing your emotions is super important when it comes to investing. It's like being the captain of a ship in the middle of the ocean. If you let the stormy seas control the ship, you might end up lost at sea. But if you stay calm and follow your map, you'll reach your treasure. Here's why keeping your cool is a must. Avoiding costly mistakes. Emotions can make you act on impulse. Imagine you're at a store and you see a toy you really want, but it's too expensive. If you buy it just because you want it right now, you might regret it later when you don't have enough money for something else. The same goes for investing. If you buy or sell stocks just because everyone else is, you might miss out on making more money later. Staying on course? Having a plan is like having a treasure map. If you follow it, even when you're feeling scared or super excited, you'll be more likely to find the treasure. In investing, this means sticking to your plan, even when the market goes up and down. The market is just like a roller coaster. Some people scream and want to get off when it goes down. But if you know the ride and trust it'll go up again, you can enjoy the ride and end up where you want to be. Then, how can you manage your emotions? Have a plan. Write down your investment goals and how you'll reach them. Think long-term. Remember, investing is for the future, not just today. Talk to someone. Sometimes, sharing your thoughts with a friend or family member can help you see things clearly. Take a break. If you're feeling overwhelmed, step away and take a deep breath. So, be the captain of your ship. Keep your emotions in check, follow your map, and you'll sail smoothly to your treasure. Rule number 5, keep learning and improving. The last rule of investing is to keep learning and improving. The world of investing is constantly changing and evolving, and you need to keep up with the latest developments and trends. In the world of investing, staying sharp and up to date is like being a surfer riding the waves. Just as a surfer needs to know the sea and keep improving their skills to ride the big waves, an investor needs to keep learning and improving to ride the waves of the market. Why we need to keep learning? The market is always changing. The market is like the ocean, always moving and full of surprises. To stay on top of your game, you need to keep learning about new trends, technologies, and strategies. Knowledge is power. The more you know, the better decisions you can make. It's like having a map in a treasure hunt. The better the map, the closer you get to the treasure. Then how can you do it? Read every day. Books, articles, and blogs can give you new ideas and keep you informed. Listen to the experts. Podcasts and talks by investment gurus can offer valuable insights. Take courses. Online classes can teach you new strategies and skills. So keep learning and improving, just like a surfer getting ready for the next big wave. It's the best way to ensure your investing journey is successful and fun. These are the 5 golden rules to success in investment. By following these rules, you can increase your chances of achieving your financial goals and creating wealth. If you like this video, don't forget to hit the like button, subscribe to my channel, and turn on the notification bell so you don't miss any of my future videos. Thank you for watching.